Welcome back to QAV America. Tony, episode 29. How are you?
Very well, thank you. Yep, all good.
I tell you what, the folks on Reddit, on the value investing subreddit, did not like my PCG pulled pork last week. I did a summary of it for Reddit. Oh, the hate for PCG
I bet.
it was great. They hate.
Did you
there's
call
so
it,
much
Did you call
hate.
it leading with love?
I did. I called it leading with love. Yeah. And manslaughter. So
PCG's part of the hive mind on Pluribus now. Come and join us. We lead with love.
They're leading with love. Yeah. That should be the tagline for that show. And it was just hilarious to me how much anger and hate came out. I was like,
Well, I'm not surprised.
Sounds like a good investment. But they weren't talking about the manslaughter. They were just talking about it being a dog of a company.
Oh, okay.
And somebody was going on about how they diluted their shareholders when they had to pay for the fires. And I'm like, and why do I care? I'm looking at it post-dilution, not, it doesn't affect me as an investor today, what happened in 2019 or whatever it was. Anyway, I did have to sell something out of the US portfolio this week. I sold VSAT. It was a 3-point trendline sell. And I replaced it with the company I'm doing a pulled pork on today, Korea Electric Power, KEP, KEPCO. One of the few times I've been able to actually do a pulled pork on a stock that is now in our portfolio because I actually had to sell something. Don't tell me what happened to the share price for VSAT today because you just broke the ex-girlfriend rule on our Australian show, and I don't want you to do it again. So the KEP story, I know you've got furniture being delivered, so I'm going to run through this one quickly today. Another power company. So last week we did PCG. This is another power company, obviously based in Korea, if you hadn't guessed from the name. Another regulated monopoly, like last week's show, but this time their regulated monopoly is an entire country, not just parts of California, although we know California's pretty big. And just a heads up, KEP report their financials in won, KRW, bit like POSCO, the steel/energy company that we covered a while ago on an earlier episode 12, I think I did POSCO. And they're also a competitor to KEP, as it turns out, but we'll get into this. But when you look at the numbers in Stockopedia, they're all in won, so you need to do the conversion. 1 USD is about 1,465 KRW. What was that TV show in the 80s about a radio station?
WKRP in Cincinnati.
Was it? Not the Korean won.
No.
WKRP, not KRW. Okay. The current share price at the time I'm doing this for KEP is about $16.74. They're listed on the New York Stock Exchange. So they're known in Korea as Hanjeon, I believe. What they actually do is, they're basically the power grid for South Korea, essentially. They generate, transmit, and distribute electricity to almost every type of customer, from households to Samsung fabs to shipyards to farms. The entire market is what they look after. The national grid, they handle virtually 100% of transmission and distribution. They have about 6 generation subsidiaries across coal, gas, nuclear, wind, solar, you name it. They produce about 60 to 70% of the electricity. There's a handful of companies, including POSCO, that also generate electricity. POSCO, when we did the pulled pork on them, I mentioned as a steel company, but it turns out steel mills are effectively power plants in disguise.
Okay.
Making steel requires an immense amount of heat and energy.
Yeah.
And when you blast iron ore in furnaces to make steel, you produce byproduct gases, waste gas, which instead of venting the gas, they capture it and burn it in their own on-site power plants to generate electricity. And they became so good at it that they started building standalone power plants and selling electricity back into the grid. And I think they might even be the second largest generator of electricity now in Korea after KEP. But back to KEP. They also sell power-related services. They run IT and maintenance businesses around the grid. They have a whole bucket load of overseas projects, including they own a couple of coal mines in Australia, or have interest in one, Boutique Coal, that they've had for 15 years. And they bought another one, Bylong Coal Mine. But they own a bunch of stuff all over the world related to energy. But, last week's show, PCG, we had not great, but fascinating stories about manslaughter
terrible stories.
Terrorist attacks and all sorts of stuff. There's a good story behind the founding of this company, not directly related to KEP, but worth telling anyway because I found it fascinating. The company started life in 1898 as the Seoul Electric Company. It was a royal project by King Gojong, who brought together trams and electric lights into the capital. He ruled Korea for 43 years, from 1864 to 1907, first as the last king of Joseon, and then as the first emperor of the Korean Empire from 1897 until he was forced to abdicate by the Japanese in 1907. And his wife, Queen Min, posthumously honored as the Empress Myeongseong, was even more powerful than he was, apparently. At the time of her death, she was this canny political player who was even more powerful than him, apparently, and was roundly hated in Korea by his father, as well as the Japanese that were ostensibly running the country at the time. And there was a conspiracy against her. One night, agents were let into the palace by pro-Japanese Korean guards. Once inside, they beat and threatened the royal family and the occupants of the palace as they were looking for her. 2 women were killed, mistaken for her. And then they eventually located her, and I won't give you the details, but it wasn't nice what they did to her. She was assassinated by these Japanese agents, and then her corpse was covered in oil and set fire to. So that's how unpopular she was. Right. She had apparently begun negotiations with the Russian Empire to align Korea with the Russians to play them off against the Japanese.
Wasn't high power prices?
No, I don't think there was a lot of power actually getting out to people at the time. The king was first crowned in 1863 at the age of 12. And as I always say on my Roman Empire shows, nothing works out better for a country than making a 12-year-old emperor. You can't go wrong with that.
Emperor Fox. Works well at your house.
Oh, my God. Nothing could ever go wrong giving complete power to a child. Never in history has that ever been a bad idea. So the Hung Song Electric Company, as it was known, completed its first power plant in 1899. By the end of that year, they had launched their first streetcar service. They turned on the first electric lights in Seoul's Jongnyo Street. And then they continued to build a public lighting network and started offering electrical services to private homes. They even built a movie theater which could be traveled to by streetcar that went through downtown Seoul. And apparently it was a marketing ploy to promote the convenience of trains and attract tram passengers. Over the 20th century, this basically morphed through nationalisation and reorganisation into KEPCO. Modern corporation dates from 1961. And it's always sort of been a political enterprise, really. It's all been about building a modern South Korea. It was run by Americans for decades until they were forced to sell it eventually to a Japanese company in the early part of the 20th century. But after World War II, America obviously was basically running South Korea for a very long time before the Korean War, during, and then after the Korean War, South Korean dictatorships were basically proxies for the United States, probably still are to a large degree, although no one would want to say that publicly. The Korean government invested a ton into it, even though it floated on the Korean Stock Exchange in 1989 and then on the New York Stock Exchange in 1994. But it was like the Korean Development Bank and the National Pension Service. It was seen as one of the founding principles of the modern South Korea. Today, the government owns just over 51% of KEPCO, but it's a lot of what it does is still driven by government policy decisions, not just market forces. So that's a good and a bad thing. It has essentially a monopoly that's government protected, but also, as we'll see, in recent times, it has been bleeding cash largely because of government policies. Fuel costs spiked after Russia's invasion of Ukraine, but the government was slow to let retail tariffs rise, so they were selling electricity at cost for a couple of years there, racked up huge losses and debts, which the market didn't react very positively to, but that did start to turn. So in 2023, they were allowed to do tariff increases. Plus, they had a policy swing back in favour of nuclear, shorter maintenance outages, new reactors were coming online, and that's driven a big rebound in profitability. Q3 2025, they reported an operating profit of about 11.5 trillion won, and net profit of around 7.3 trillion won for the first 9 months. Can you quickly divide those by 1,500, Tony?
No, sorry.
Okay. The credit rating with Fitch is now AA- and gives it a stable outlook. So they've had a turnaround, but there's some issues there with the government's level of control over it that I think the share market is being cautious about. But at the end of the day, their economic engine is pretty simple. They basically just sell a gigantic volume of generated electricity at regulated tariffs. As long as they keep their operating costs under control, it should be easy money for a company like this. And they do generate a lot of cash, and the price to cash flow will blow your mind when I get to that in a second. But like a good business, good sort of value investing business, it's boring. It's just like we did like the PCG last week. All they're doing is generating and selling energy.
Trying not to kill people.
Try not to kill people, yes.
Lead with love.
And try not to have... Yeah, they're leading with love in Korea. They're going Gangnam Style on Korean energy. It's the only Korean reference.
But you're right. I was happy to see this on the buy list. When you said you were talking about it, because of that fact, it's a regulated utility. It's a great value stock.
Not just on the buy list, but at the top of the buy list, which is why I added it to our portfolio this week.
Okay.
But yeah, they got a monopoly status, so. But as I said, good and bad can come with this level of government control that they have. But they've got quite a large nuclear fleet, which has some structural advantage versus pure fossil fuels. The government has a 2038 plan which explicitly increases nuclear's share of the mix and slashes coal. And as we know, I don't know really what South Korea is doing from an AI perspective and generating electricity for AI data centers, but I'm sure they're doing something. I'm sure Samsung has got a major robotics and AI plan. I know that from looking at what China is doing in robotics and AI, that the car companies, like Tesla is in the US, the Chinese car companies are all over robotics and AI. I'm sure the South Korean car and technology companies aren't being left behind in that space as well. So these guys will probably have to provide all of the electricity and power to all of the robot and AI farms that'll get built in South Korea in the next 10 years.
Which is the typical sell picks and shovels in a gold rush scenario, isn't it?
Exactly, yeah. Who cares which AI company wins,
which car company
as
wins,
long as you're providing the electricity for all of them. But the market is still discounting it, and possibly for good reasons. Investors are looking at recent losses. They could be worried about tariff populism. They could be worrying about the yuan and its weaknesses. They can see climate and transition risk from coal to gas assets that may need to be retired early, et cetera, et cetera, et cetera. There are some climate lawsuits against KEPCO.
Right.
Farmers and youth groups are apparently suing them over climate-related crop damage and climate-related impacts on quality of life and all of that kind of stuff. So it may be a liability wedge moving forwards. But, we don't try and forecast the future. Our job is to look at the numbers, and let me take you through the numbers. Are you sitting down?
Yep.
Price to operating cash flow, 1.52, Tony.
Fantastic.
You're paying about $1.50 of market cap for every dollar of operating cash flow for a regulated monopoly in South Korea. So, either the market thinks that this level of cash flow is unsustainably high, or it's heavily discounting political and transition risk.
Yeah, well, as we spoke about on the Australian show, it could, this company may have some big CapEx requirements coming up too, so the cash may need to be used. If it's building nuclear power plants, almost certainly. But at the moment, throwing off lots of cash.
Yeah. The Petrovsky F score is 8 out of 9, which is one of the highest, I think, or the highest, equal highest we've ever seen. It's ticking nearly every financial health improvement box right now. Margins improving, leverage stabilizing, cash flow strengthening after a period of pain. So, at least the F score believes that KEPCO is a healthy, recovering business, not a zombie utility. Somebody in Reddit, when in response to the PCG, said, "Utilities never compound."
Utilities never compound? What does that mean? They don't grow?
I guess. You're not going to get double baggers out of utilities or something, but whatever, dude.
Okay, they kind of do. And if you reinvest the dividends...
Somebody said, this is a stock I'm more likely to short than buy. I was like, why don't you do that?
Yeah.
And we'll compare notes in a couple of years. I don't know. Looking at the pulled porks that I've done for the US show in the last year, we've got about a 60% success rate on them. 40% have gone down since I did the pulled pork. 60% have gone up, which is, it's my sort of run rate that we look for.
Yeah. It's Warren's long-term average. It's my long-term average. Yeah.
Not all of them are going to be winners, and I don't know that PCG will be. I don't know that this will be, but we sell the ones that break our sell rules, and we hold the ones that continue to do well. Book value, equity per share, when I break it down into US dollars, is about $25.11, and book plus 30 would be $32.64. The current share price, as I said, is about $16.74.
So we can buy it for half book.
Yeah.
That's incredible.
1.5 price to operating cash flow and half book. 0.67 times book. So deep value territory.
So that I am wondering whether that means the assets need replacing.
Yeah, quite possibly. Yeah. It's above, like our IV1 is $4.33, our IV2 is $5.08, so it's well above those. But looking at the rest of the numbers, so it had a QAV score of 0.56, which is why it was at the top of the list. Average daily trades about 7.6 million. PropCAF, we've talked about. Quality rank is 50 in Stockopedia, so it doesn't score for that. Stock rank gets a score. It's above 90. I'll get to it later. F score, as I said, is an 8, so it scores for that. And what else? Price is not less than IV1, not less than IV2. Does get the book. Doesn't have a new point upturn.
What's its yield
like? Value growth isn't positive. Not great.
Okay.
Yield's low. The yield is they're not paying a huge dividend. I guess they're investing it back into the business, I assume. Okay. I do have some notes on the yield here. Yield TTM is 0.43%, basically nothing.
Wow.
They have been more generous in the past, but they've just come through these crisis years, so they slashed or suspended dividends to
Right.
conserve cash and appease regulators who didn't want them paying large dividends while households were angry about tariffs or something, I guess. So that may come back in the future. We'll see.
Yeah. And by tariffs, you mean prices, retail prices, not tariffs between countries.
No, yeah. The regulated electricity prices that they have there. So all in all, they actually would have got a 10 out of 13 once I accommodated for the difference between the won and the US dollar. They got an 11 when I did it, but I had to adjust it. It's about an 80% quality score on our scoring. And a really strong QAV score. So that is, stock rank is 95, by the way. That is Korean Electric Power, and I have added them to our portfolio. So
yeah, good.
Let's see how they go.
Good. And, as we spoke about in the Australian show, these are kind of, these utilities, even though they might not compound, like a growth stock, they're, wait until there's a downturn in the market and nobody turns their light bulbs off. They still keep needing electricity and this stock will just keep chugging away. So in the long term, it is, these businesses are stable and they throw off lots of cash, which can maybe not in this case immediately because they have regulatory problems, but eventually will lead to high dividends or buybacks. And so people will benefit from that point of view.
And at the end of the day, I just look at it as a company that's generating a ton of cash that you can buy for nothing. So
correct.
It's a lay down misere from my perspective. And
agreed.
If it goes belly up, it goes belly. Like if things go badly for it in the future, we sell it and buy something else.
Correct.
But based on the numbers that it has today, it's a no-brainer.
Good time, isn't it? Good time to buy.
Well, for us, but I guarantee you when I post this to Reddit, everyone will be furiously angry at why it's such a bad idea and why they should be buying Google. Somebody with the PCG one, somebody said, I think Google is overpriced, but I'd double down on Google before I'd buy this dog. Like, yeah, go for it, son.
That makes me even want to buy PCG more.
By the way, Google's AI stuff that's come out with this week is insane. I'll show you something in a minute off air before your furniture turns up. But yeah. Anyway, that is QAV America for this week, Tony.
Thanks, Cam. That was good.